Hi, my name is John Rebello, and this is the Bullion Vault. Hi, Willem, how are you doing?
Very well, thanks yourself, Deon.
Very good, thanks. So we are on episode 18, and we got quite a bit of almost a recheck to where we are. We are now into the first week of May, moving into the firmly into the second quarter of the year. In fact, we're coming to the end of the second quarter. So there's a couple of things that we wanted to chat about today. I know you wanted to bring some interesting stuff with regards to PGMs and specifically one of them, or one of the platinum group metals. But I think let's start there and then we'll go into, because I really want to unpack the whole thing with gold. It's quite interesting. There's a lot going on right now. Is it overvalued? Is this the right time to buy? And so on. So I think let's get into your side, which you wanted to present, and just some interesting information.
Yeah, I mean it's not relevant to anything investment related. It's just some interesting facts that I came across the other day, and I was reading an article on osmium. Now, I mean, I didn't know much about osmium, so I thought, okay, well, let's see what this thing is all about. And well, let's start with the start. It's a platinum group metal, so
Correct.
it's a PGM, and it is actually a very, very interesting metal because, well, if we look at the most expensive sort of PGMs out there, you've got rhodium at $5,250 an ounce. You've got iridium at $4,150 an ounce. And then you've got osmium at $2,020 a gram.
A gram. Yes, I was going to say
It's,
a
it's
lot more.
and it's actually very difficult to find pricing for this. And the reason for that is it's not really traded all that commonly on the open market. It's more institutional investment. It's more sort of industrial investment and things like that. So if you're looking at osmium, you're looking at about $62,800 an ounce, which is pretty insane. But if you look at the metal itself, it actually makes sense because osmium is, well, firstly, it's the densest naturally occurring element on the planet. So anything heavier or more dense than osmium is a man-made element or a man-manufactured element, if you want to call it that.
Yeah.
I'm not sure about
For a
this.
lack of a better
I'm
word.
not sure about the scientific terminology for that, but basically it's the densest naturally occurring element. Now, the problem with it is it has an insanely high melting point. It melts at 3030 degrees. And then also, it's not found in mineable veins. All osmium that they mine is actually as a byproduct of mining platinum or PGMs.
Correct. Yeah.
It's found in little sort of scattered
Pockets
bits and
almost. Yes.
pieces, and usually it is connected or fused with the other PGMs. So it's basically, as I said, a byproduct. It is extremely rare. The low crustal abundance of about 0.001 part per million. So I mean, you can just imagine. It's where did I put this? 30 grams of osmium. You need to mine about 10,000 tons of platinum ore. And I mean, so you can see why it's it fetches those prices. And another thing about it is the refining process of osmium is insanely complex because it's fused to the other metals, because it is an alloy, or an alloy, not fused really, it's an alloy with the other metals. And because of this, it takes an extremely complicated, time consuming, and expensive refining process. So basically, osmium in its raw or as a metal is extremely brittle. It's very difficult to work with, and they use it in things like extreme high-end jewelry, nibs for high-end fountain pens. And I mean, you can guess how high-end they have to be if you're looking at about $62,000 an ounce of this material. But
Or
it's
two
also
thousand two thousand odd dollars a
a
gram.
gram,
Yeah.
yes. And well, it's also used for needles in medical procedures. It's used for electrical contact, and it's used as a catalyst in the chemical industry as well. So once again, we're sort of seeing the swing towards the industrial side of the metals that we see in platinum, that we see in silver. And the most interesting thing to me is osmium is toxic until it is crystallized. So for a long time, it was just considered to be toxic. And then they found out they can convert this into a crystalline form, which is then used to make all of these things, all of your jewelry, all of your fountain pen nibs, and etc. etc. So that's another piece of the refining process, or the production process that needs to be added. And yeah, as a result, I mean, we see this incredibly weird metal that puts the others to shame when it comes to price, really.
And you've raised quite a few things, and just from my knowledge of the industry, and especially being coming from a mining background, especially within the platinum sector, that there's within the high felt, the band of platinum that you get.
Yes.
So it basically runs from Rustenburg all the way up past Tabazimbi and then up into Zimbabwe in the shape of a crescent moon. And that's where the actual ore of the platinum is. It's quite a shallow reef, and generally it's mined at, and you got two or three reefs that they're mining. The one is called the Merensky Reef, which is a very high, a platinum rich reef, and is very quite clean. And then you got the which they call the UG2 and UG3 reefs, which is a very chrome dense reef, and a lot of your byproducts, your byproduct metals come from it. So you'll get gold, silver, iridium, rhodium, osmium, and all of those metals come mainly from that secondary, third reefs. And again, as you say, the interesting thing is, and from what I know within the sector, there are not all refineries can actually work with it. There are specialist refineries, and I know of one within the Gauteng region where we base that specializes in osmium. And again, it's as you mentioned, high melting points and PGMs and platinum in general. Out of the precious metals that we work with, which is gold, silver, and platinum, has a far higher melting point than both gold and silver. Is far more rigid, even from a minting perspective. And I just had an interest is when we use platinum, we got to have specific dedicated rollers, and when we rolling it and pressing and stamping it, because any contamination of platinum that it gets from other metals will actually cause it to crack, and it virtually becomes useless, and we'd have to remelt it and start that whole process again. So it's a very expensive, and the same thing as it runs through with all the other PGMs. And again, with osmium, the understanding where I first was made aware of it was for light.
Yeah, it was actually before, sort of, I would say the invention, the discovery of tungsten and
Yes.
the tungsten filaments. Osmium was actually used as light filaments because of its extreme high melting point, because it is so hard, and it was actually used as a precursor to tungsten filaments in light bulbs.
That's fascinating, and it's really interesting information. And again, this is part of what we want to be bringing is just a little bit of other information that ties these precious metals together. We've had inquiries of people wanting to buy other precious metals. We will always look at it, but again, it has to make logical sense as far as the supply side, the demand, and then also the resale side. So there's no point in buying a metal and then you pay a premium because it's not designed to go into the investing sector. And then suddenly when you want to sell it, you got to literally find an industrial buyer for it. And that's where a lot of those metals are actually not available to the general man in the street.
Yeah, and I think what you're touching on there is also important, the premium you pay on the metals. Because if you go and look, if you find a bit of an unscrupulous dealer, and let's say you're looking to buy a Krugerrand, and this dealer tells you, oh, but this Krugerrand is a 19, I don't know, 81 Krugerrand. It's a special year. There aren't many of them around. You'll get a big price for that. And you buy it, you pay the premium on top of it because this is a special one. And eventually, when you want to sell it, you realize, but I'm only getting the price for the gold. Nobody cares that it's 1981 or 1991 or whatever it might be. They're interested in the gold, and that's where the important thing is: the gold content of your medallions, of your coins. That's what is important at the end of the day.
And you say this, and I'm smiling because I've encountered this many, many times through the years where I have a client that comes to me and says, I went to the shop up the road and they sold me these proof set Krugerrands, half ounces. And I said, so how much did you pay for them? And at the time, I mean, I'm talking probably around 2021. He paid about 45,000 Rand for a half ounce proof Krugerrand. And he was quite chuffed because they look beautiful, they're amazing. But to be paying nearly 100% of the value of what a half ounce would actually cost you. And I said to him, sadly, when you do want to realize the real value of those half ounces, expect to be disappointed. And unfortunately, there are a lot of companies in the sector that do. They brandish these fantastic coins and they're special and they're limited and they have a numismatic value, this and but as soon as you want to sell it, suddenly they say, "Oh, hold on, but did we tell you we'll only buy it back at the spot price if there's a slight premium, depending on demand and so on."
Yeah, and that's unfortunately you're going to find that from just about every gold dealer. If you go, you've seen the pop-up shop, sell your gold, sell your
Divorce your
value.
gold.
Yeah, those sell your jewelry, all of that. Unfortunately, what's going to happen is you're going to take your gold jewelry or your gold medallions or whatever you have, your Krugerrands, you're going to give it to them. They're going to say, right, it's this amount of gold. It's, let's say, 1 ounce of gold. The gold price at the moment is this. We're buying at spot, less whatever. This is what we pay you. They don't care if it's a special edition with a famous face on it or anything like that. They don't care about the premium you paid. That's what that gold is worth to them. And at the end of the day, that's what that gold is worth. It's worth what somebody is willing to pay for it. Now, yes, you might get special editions or something like that, that another coin dealer, another numismatic dealer would like to own, and he might offer you a premium on that. But that is not your true value of that gold. That is a sentimental value, a personal value that somebody else attaches it to that specific coin. It's like buying or selling a house. I might have gone in and I've done all this work on my house and I love it and I've been living there for 25 years and I think it's fantastic. And to me, that house is worth 3.5 million Rand. But you get somebody in, a real estate agent, they take a look at it and say, unfortunately, you're going to get two. And now I'm all upset because, I've spent all this money, I've spent all this effort. It's precious to me. It's my time, it's my effort that's gone in there. But that doesn't mean anything to anybody else. And it's the same thing with these coins. Your sentimental attachment to those coins, anybody's sentimental attachment belongs to them. It doesn't carry in the actual price of that product.
And also what's interesting here, and I've always said it with your circulation coins, such as the Kruger Rand and Britannias and American Eagles and so on, is they have a value to what you value them. So, for instance, with my children, I have a Kruger Rand for each of the years they were born. But I had to look for a couple of them because my son is quite old in comparison to my youngest child, who is 5 now. So to get a 2020 Krugerrand was easier versus a 2003
And,
Krugerrand.
and I'm sure when you said I'm looking for a 2003
Oh, the
Kruger
value
Rand,
went up. Yeah.
oh, that's a special year.
Yes, and suddenly the premium was that much more. But that's what you're highlighting here is I had a specific need that need to be fulfilled, and that came at a premium.
Definitely, and I mean, that's fine. But anybody who's looking to actually invest in precious metals, invest in gold bullion, silver bullion, platinum bullion, whatever, need to understand at the end of the day, they shouldn't expect that premium to be carried or to be um, followed by the next owner to the person you want to sell it. If you're selling it to a company like, buy gold, we buy gold, divorce your jewelry, whatever it might be, they're going to value it at the base price of the metal. So how much gold is in this? What's the price of gold? What's our premium? That's what we offer you.
And sometimes their actual valuation is not just maybe spot less 5 or spot less 8. I've seen some dealers go as much as spot less 20 to 30 on the actual price. So they know that a lot of the time the people that are selling that piece of jewelry or that piece of gold is quite desperate to have the cash. And that's one of the advantages of gold or precious metals, is it has a monetary value that you can go anywhere in the world and you can have it realized. But also there are people that will make sure that they can see there's a need, and someone is desperate to buy or to sell, so that there is always premiums that will be added to that, penalties for the person that is selling it, that if you had maybe been in a better situation or held out a lot longer, you would actually get a far better price for it.
Definitely. I mean, sadly, as with everything in life, every industry, you've got your people who are going to take advantage of the fact that you really need to sell this now. You don't really have any other options, and you're going to take what you get, and they will take advantage of that, which is why we always say look for a reputable dealer. Look for somebody who does have a track record. And, the longer the track record, it usually means that they're fair. They're willing to give you a fair price. They're willing to give you a fair deal, and that's a danger. I think a lot of these times you walk into a shopping mall, there's a little pop-up shop, and you're desperate to get rid of this ring or this necklace or whatever. You're going to take what they offer you. And I think the other problem is, and this is what we're trying to do with these podcasts, is people don't know.
Yeah. My experience of precious metals, especially from an investing perspective, a buying perspective, was those lovely shops in the malls where the coins were attached to election cards from 1994 with the Madiba signature and the clacks, and suddenly the whole set looks amazing because it's a piece of history. But and I've seen this, I've personally witnessed this, where a client had actually sold a troy pound of gold, which is over 300 grams of gold, and it was a giant medallion of Mandela and de Klerk. It was historically, it was a beautiful piece, and it had all the paperwork, and it was minted in from the mint in Norway, and there was so many things that showed unbelievable value to this. The sad thing is, when and the my client that had bought this from one of those shops had paid an unbelievable premium for the historical value. When he chose to sell it, he got I gave him the best possible price, but he got just off spot for it. And the interesting thing is that gold was taken out of those beautiful boxes and put into a pot and melted and remelted and resold to create other medallions. And that's a sad thing. For me, I saw the historical value, but when it comes down to the actual value of it, it still comes down to what's its base price in gold or silver or platinum, whichever metals they are.
Definitely. I mean, historical value, I think, unless you're looking like something like proper pirate doubloons or Roman gold coins or something like that, that has an actual historical value to it in that sense, then be prepared if you try and sell your gold to get the spot minus whatever the dealer decides to give you on that day.
Yeah, and I think from our side it is covered. And again, we always say, this is advice. We are not financial advisors, but please do your homework, do your research, phone around, speak to people, and you'll start to see that generally there are really good companies out there that will offer you the best possible deal. And there are also other companies will show you all the smokes and mirrors and these big fancy sets in lovely boxes and all shiny, and charge you double for it. So just be aware of that. And again, we always open, drop us an email, go onto our website, and we're more than happy to answer any question when you're not sure of something. Because again, information equals power, and power makes better decisions.
Definitely.
So moving on, and I'm going to just divert a little bit and go to F1, and I'm looking at my producer, if that's okay. We get a thumbs up.
We got a raised eyebrow, but
Yeah, well, I take that as a thumbs up. So we've just had the Miami Grand Prix. The sprint was quite interesting, but again, McLaren came out on top. Verstappen had a horrendous go in the the sprint, and then of course in the full race, which was on the Sunday evening for us, he just was not there. But we saw him driving with his elbows out again, and he's definitely not building as he has always. He's a very serious guy. He's a four-time world champion. You know, he's got a mission, and we got to respect that. But you can see amongst his peers, he kind of starts to see who's going to be his biggest threat, and then he goes hard at them. So you can start to see that Lando, as much as Lando is a mate of his, he's not his real threat. And I think Piastri is now starting to show just how young he is and how mature he is. And I mean, the other guy that I'm really, really excited about is Alchemy Antonelli.
Yeah, well, let's start with Piastri. I mean, wow, 3 on the trot, I think it is now, which
Absolutely.
is the first McLaren driver to do that since Mika Hakkinen.
Yes,
I think it
correct.
was in 98 or 99, round about
Yeah.
there.
Yeah.
So, yeah, I mean, he's really, if you look at last year, everybody was full of Norris, talking Norris, Norris, Norris. And I think Piastri sort of just slipped under the radar. He has knocked it up another gear this year, and he is doing extremely well. Antonelli, superb qualifying lap for the sprint race. Um, very, very decent job in the race qualifying, but I think in both races you could see just that lack of experience
You know,
shining through. You know,
he is 18 years old. We got to
I'm
contextualize that.
that is a fair point, but on the other hand, in Formula One, there's no more time for being young.
Well, and you're right, because you could see how the other cars pushed him around in that one corner where he could have pulled a Verstappen that he did to Piastri
No,
the
definitely,
previous race.
but I mean, as I said, he doesn't have that experience yet. He'll get it,
Oh yeah.
but for now, the talent is undeniable.
Yeah, so I think the next one is in a couple of weeks from now, and then there's 3 weeks in a row of Formula One. I think quite clearly it does look that the McLaren is going to start to pull away with it, and it may become a two-horse race as to who. Um, you can never, if you love or hate him, you can't and never write off Verstappen. He regardless is a fighter, and if you love or hate him, you got to appreciate how he never ever gives up.
Definitely, and I mean, yeah, as you say, I mean, in the race pace, McLaren is untouchable. Qualifying, it's actually a lot closer than it seems. You've got the Red Bull of Verstappen up there in the mix. You've got the Merc sticking their noses in there. Every now and then, Ferrari has a moment of
I'm
magic.
gonna get to Ferrari.
But yeah, it's I think it's actually very nicely balanced, except for race pace. The other teams sort of seem to be neck and neck, and you've got a Williams putting his hand up in there as well.
And it's impressive for a small team like that. To it's awesome to see that Williams is starting to gain some of their old credibility and starting to move to the top end of the midfield teams.
Definitely, and I mean, I think they've got an amazing driver lineup. Sainz is pretty much my favorite driver at the moment, so I'm gonna be there rooting for them.
So yeah, I mean, Sainz, who was former Ferrari, and it's a nice let into that. It was quite comical. I mean, you could see Hamilton saying, my tires, and he's on softs, and of course Leclerc was on hards. They just got in for a change, and of course his tires were hot and ready to go, and he's sitting behind him, and he's saying, I need to pass," and it's like, "Can I pass?" Dead silence, dead silence. "We'll come back to you." And then, eventually, like 2, 3 laps later, he passes him, and then Leclerc's tires come on, and then Hamilton's go, and then eventually they say, give the place back to Leclerc, and he gives it back, and then they said, Please give it back," and he says, "I did. Would you like me to let Science also come past?" And so you can see there's a lot of and what's interesting is in that first whole barrage of messages from Hamilton, they were saying that Leclerc was only told once, give Hamilton the way, and he said, "Sure," and he passed. Yet, the way Hamilton was reacting was almost as though it was Leclerc having actually the option to hold him back?
Well, it's okay. So if you've got a seven-time world champion, statistically the greatest driver of all time, I'm saying statistically because you know what's on paper and what's in the car doesn't always
Translate.
translate, but statistically the greatest driver of all time. And you know, he's not used to sitting behind a teammate and having to ask to be let by. So yeah, and he's just not coming to grips with that Ferrari.
No.
He's getting shown up by Leclerc. It As a seven-time world champion, that's got to eat at your ego. And I think the biggest problem Ferrari has right now is strategy, which has been a
Yeah.
weak point for a while. Not so much the actual greatest strategy over the race, but if they had they let Hamilton by the moment he got there, gave a big clear instruction saying right now let him by, he might have had a chance to catch him, and Leclerc could have sort of followed later when his tires were up to scratch, and by that time Hamilton might have passed Antonelli. But yeah, it was this delay, this wait, this should we, shouldn't we, and I think that's a good way to get back into gold.
Absolutely. So we that's actually a great way to go back into gold. So, we get asked this a lot. Is this the right time to buy? Gold has hit all-time highs. Should we be buying now, or should I bought 2 years ago, or must I buy now? The prices are high. When's the right time to buy?
If you're going to be looking for the exact right time to buy, you're going to be waiting forever, I think.
Or never? So what's interesting, and we looked into this, and I had a client that actually asked me the same question. And what I did is I actually went and looked at the last week gold price chart, and then I looked at the last 30-day gold price chart, and then I also looked at the last year, 6 months, so to have a good understanding of where the price is. Another thing is we also looked at a couple of different things. For instance, if you compare the growth of gold since January to date, and you had to compare that to the S&P 500 and you index them together, gold has outperformed the S&P 500 by 42.5% since the beginning of the year. So it's outperformed the equity market hands down. But if we then go and look at who the big buyers of gold, what's interesting is that and there's charts available for this, is your people that, if we call them small institutional investors, that's the man in the street. Sales of medallions or circulation coins, gold coins, be it from the US Mint or the Perth Mint, are actually down. From 2019, there was a massive peak in their sales, and their sales are down. So then they're not the people that are buying gold. Who is? Then we go and look, and we see that all the central banks have been a major driver in the buying of gold, specifically the Eastern central banks. So, of course, your Indias, your Turkey, your Russia, and of course, China.
Yeah, China is at the moment probably one of the biggest players in gold at the moment, and they've been snapping it up like hotcakes.
And what's interesting is we drilled down even further, and we said, okay, but why has there been, and what was quite interesting is in China, just on gold ETFs, since the beginning of the year, from January through to March, there were about 23.5 metric tons of gold that were procured through the ETFs within China. And then what's interesting, in April alone, over 29 tons, metric tons of gold was procured through the ETFs. So what does that say? Is it, again, your small institutional investors? It turns out that China has actually allowed all the insurance institutional investors, companies, the big insurance houses, to actually start utilizing gold as part of their portfolios. And suddenly this massive spike in the demand for actual gold.
Well, it's interesting that you say that because in China there's also been a great pickup of, you know, as you call them, small institutional investors among the younger generation who are starting to buy into gold. And the amount of gold that they're procuring at the moment is absolutely crazy. As you said, it's tons and tons, and there is this buy-in from the young generation. And of course, that's going to continue. They're going to pass that on to their children, who's going to carry on that sort of the mindset of buying gold. And overall, I just see absolute masses of gold being bought in China at the moment.
And you raise something that's very close to us. I mean, we released a product specifically for it known as the Gold Bean Coin. And it's little 1 and 2 gram little medallions, gold, 24 karat gold medallions. And that was born off this massive viral trend within the East where the youth were, as you mentioned, buying into grains of gold, which they call granules, and they are starting to collect them. And what you also really highlighting there, and this is very important, is a whole new generation's being exposed to the benefits of buying into a commodity such as gold.
Definitely, and I mean, you know, you can dress it up as pretty as you want. If you look at the way they're doing it, it's also very clever that it is marketed to this younger generation. You know, you can get all sorts and shapes of beads, and they're all, you know, they'll weigh 1 gram or 2 gram or whatever it is, and you get your little bottle and you put them in the bottle and you've got them on display, and it's maybe a sort of a trendy thing to do, but at the end of the day, it's still an investment in gold.
Absolutely. And for us, we take that quite seriously. And as I said, as a business, we've looked to really bring a product specifically tailored for that market. And we're quite busy in getting that product ready. It is available already for the market, but we're looking to utilize a certain distribution networks and supply chains, which these things from our side is not just a once-off thing. It's making sure all the right infrastructure is in place and so on. But that doesn't, the fact that there is a need for it and we see that there's a massive demand. I've mentioned it before that you look in the US, it's a very established coin collecting, buying of medallions and coins and sovereign coins and so on. So is a lot of Europe, so is the UK, where those markets are known for it. The East is coming up, and you see the volume of people and just sheer mass amounts of people that it makes sense that people are starting to see it. We go even further and we look at like, is the gold price undervalued right now as it stands?
Well, it's an interesting one. The gold price is proving extremely robust. Let me put it that way. I mean, when was it? Last week, we saw a massive sell-off, and it actually went to under 2000, 3,300 for the first time in a long while. I can't remember exactly what the bottom it was that it hit, but it was 3,250 roundabout there. And I think that was just before the weekend, and I thought to myself, "Oh my goodness, that's quite a dip. We're going to get people sort of getting worried over here." And I carried on with the weekend, and on Monday I took a look, and it was back up to 3,400. And that's the thing; it's proving to be extremely robust.
Yeah, and what you are alluding to here, and I'm actually looking at the chart as we speak, is around the 22nd of April, we had that peak where it had broken over the $3,500 an ounce. There was quite a bit of a drop down the subsequent days afterwards, but then there was this leveling out where it was sitting consistently around $3,300 an ounce, dipping underneath a bit of a dip, and then pulling straight back up. So it's showing that the new real base resistance line for gold is probably around 2,250,
3,000.
3,250 or 3,300 is kind of where it is. We say straight away, any pullback or any profit taking, because generally what happens there is you'll have a lot of people who are almost betting on the price. So they see Donald Trump opens his mouth about tariffs, and overnight the price of gold shoots up. And there are people that are waiting for those calls. They then hedge a lot of money that flood the gold sector with money and buy. The price shoots up that little bit more, breaking the $3,500. Then suddenly they want to profit take. So they've made X percentage over a period of 28 or 48 hours. And that's where you see that drop in the price. And generally that is how the markets will fluctuate. And a lot of the time those pullbacks are good signs of that the market is that a large percentage or a percentage of the market is profit taking.
So what we're seeing is gold actually behaving more like silver used to behave. You've got these big price swings. We talking 3,260 to 3,500, back down to 3,200 and something, and then back up to 3,400. I mean, it's not small amounts that it's going up and down. It's some pretty big swings happening at the moment. While silver, on the other hand, is just sitting around about the $33 an ounce, just hovering.
Yeah, and again, what's interesting, and even just with these recent pullbacks, is it's still sitting firmly above that 3,300 mark. And interesting enough, just on mentioning silver, and silver again also, it's down a little bit, but it's sitting firmly around 32, nearly $33 an ounce.
Yeah, and I mean, yeah, the gold silver ratio is still at
Over
historic
over 100,
highs.
yeah.
Yeah, it's still historic highs at the moment, and it's yeah, that's going to close at some time. And I must say, I don't see it being because of gold coming down.
No, I think where silver, and we've said this in previous podcasts, is it's been running at a deficit, and it's been running at a supply deficit annually for the last 3, 4 years. So at some point that has to translate into the increase in price.
And yeah, as I mean, not only us, but a lot of industry experts say when it's over 70, the gold silver ratio is over 70, that's a buy.
Absolutely, and that's a buy for silver. So in that relation on the gold silver ratio, as soon as it goes over 70 to 1, so in other words 70 ounces to 1 ounce of gold, then that is considered that silver is actually cheap in relation to gold.
Definitely, and yeah, well, we love silver, we love gold, we love all of the metals, but right now that gold silver ratio is definitely pointing towards silver being something to look into investing in.
So any final thoughts just on what we've discussed on gold, and that number, where is it going to go? Where, in your mind, I mean, if you had told me a year ago, not even, that some of the industry experts or commentators are talking about $10,000 an ounce, I would say it's a bit of a stretch.
Yeah, I mean, we've had people talking about $10,000 an ounce for a while now. I think maybe it's still a bit of a stretch. I mean, it's not impossible. Nothing is impossible, but I think it's still a bit of a stretch. However, had you told me $3,500 an ounce, I would have said that's at the high end of the optimistic scale.
Yeah.
Um, but yet we've reached that, and we've seen Goldman Sachs, we've seen all of these institutional investors revising their targets, revising their predictions. I mean, they're talking $4,000 an ounce now, where beginning of the year it was $3,000 an ounce, then it was 3,500, now it's 4,000, and I think we're seeing an unprecedented climb here, and something that who knows where it's going to end.
And again, it comes down to the environment. It comes down to geopolitical uncertainty, global economic uncertainty. We can look at macro levels, be it the US, be it South Africa, or any country. And generally, we see that economically, the countries are battling. There's big inflation as far as food inflation, currencies devaluing. We see the dollar devaluing to a lot of the big currencies, including the rand.
Definitely, and I mean, so talking about the rand, that has strengthened quite a bit at the moment. We there's an anticipated interest rate cut for the US, makes risk more attractive, and investors are much more eager or much more likely to take a risk and invest in South Africa, hence the boost in the rand. We also see very mild data coming from the US, which is actually a contraction of the first quarter of 0.3%. And there's been a substantial fall in US net exports. I mean, we're talking 4.8% down. There has been an increased import from the US because of the tariffs. Everybody's scared. We're getting all the stuff in now before those tariffs kick in, and that has devalued the dollar. So yes, that has played a part in the rand actually strengthening. And it certainly does play a part in the gold price going up. Now, if we look at China, and I just want to mention this briefly, they've just found a new gold deposit. And I mean, they're talking probably the largest in the world, 1,000 metric tons of gold, they say. And if we look at that, this might be the largest gold deposit ever found, surpassing South Africa's South Deep mine, which was always considered the granddaddy. Um, it's a bit of a logistical nightmare. They're talking about 3,000 meters deep, but I mean, firstly, we've done better.
Well, I was going to say if they need the expertise, and I'm sure from a deep level mining, they could look no further than a lot of very highly qualified individuals
Yeah, I
that would
mean,
be quite happy to go
I
and take
mean,
those expertise
yeah,
across.
Mponeng is what, 4.2 kilometers deep. We know how to dig that, but I mean, this the Chinese. What's the chances of them not figuring that out?
Well, again, you look technologically, and you'll probably see a lot of it will be mechanized. You'll see that they don't need to focus on a lot of the variables that we do. And you talk about Mponeng, which is just on the outskirts of the western side of Johannesburg. And I've been down. I've been right down to the bottom, right down to the bottom. It takes over 90 minutes, and it takes two vertical shaft drops, a couple of across catching underground locos, and then a few diagonal shafts, and then a final into the development area. In other words, the bottom of the bottom. You actually take a chairlift, like a ski lift, but you sit on it with it saddling over it, and you go down to the final deep levels. And down there, there's no air ventilation. They're still putting all of that stuff in. So it's called development areas. The temperature without any ventilation goes over about 45 degrees Celsius. With air conditioning and talking under the areas that are in production, you would have an average temperature of around 25 degrees on any given day. And so on the surface in the middle of winter, it could be 0 degrees Celsius, and yet underground at 3,000 meters, it's 25 degrees. You're hot and sweaty. You are taking all that cold, warm clothing off and literally wearing a t-shirt that is getting drenched with your sweat. And just the environment is just excessively humid.
And I'm sure the absolute terror of having 4 kilometers of rock on top of you.
That said, and this just in closing is I've been underground when there's been a fall of ground or a little bump. As the mine captain I was with, he had said to me, and it was a loud explosion. And suddenly, he was walking all casually, and he started to be quite urgent in his demeanor and the way he just and of course I followed him, and I said, "What was that?" And he said, "No, it was just a little bump." And again, we don't appreciate when you drive past these big mines and you see the headgear and you see the shaft there, and yet underground they have an underground footprint of probably 20 odd square kilometers around there. That it's almost, and I liken it, and I've tried to explain this to my children. It's like a tree's roots underneath there, that you got thousands upon thousands of people, or ants, like an ant mine, and you got these thousands of people on the surface. It all looks quiet and serene, and yet underground they're drilling holes to prime, and later on in the afternoon they blast, and then once it's blasted they got to remove that rock, and then that gets sent up and everything. So it's a whole system, and that system doesn't stop 1 hour a day.
So and it's just to end off with the scariest thing of all is this 1,000 metric tons of gold that China has discovered. The greatest ever deposit is only enough to satisfy China's demand for 17 to 18 months.
Yeah, and again, this begs that question. Where will the price of gold go? Like I said, today it's been quite interesting. That data from the insurance companies within China, they really starting to push the gold. And it's always interesting when gold was at 1,500 or $1,800 an ounce. There wasn't this frenzy. And remember, we spoke about the Kinselberg and Minsky model, where once you get the bigger markets or the bigger environment taking interest, so your bigger population. That's the middle Joe public and the general people. When they start to get to it, sometimes they're getting on to the end of really the real value. And that's when the prices start to go more ballistic. And again, that's where you have this massive increases overnight, and then there's sharp pullbacks, and that's where people tend to lose money. Are we there? I don't think so.
Yeah, if we look at this cup and handle formation that's forming at the moment, I don't know if you've seen the rim of the cup yet.
No, and again, it was part of what I'd actually been looking at, and you look at the all-time highs, and again, you look from the 1970s, and it actually peaks out in 1981 to a high, or 1980 in fact, and then it kind of drops down and then goes all the way through to 2015 and right up to 2011, sorry, where there was a peak. Again, there's been a drop, and that all the way through to 2020, where it actually had come down quite a lot, and then since then it's been building, and then it builds and builds and builds to where we are now at around 3,000, 3,400.
I don't see it going down much.
No, no, and again, and I'll reiterate what I said earlier. It's based on where the world is geopolitically, economically, and also just the number of variables that are. We've had monetary policy for the last 50 years where any issue, any problem, just print yourself out of it, push more currency into into circulation. That creates greater inflation and all those knock-on effects. And also debt to GDP ratios. The US is over 100% in debt to GDP ratio right now.
And I mean that's basically what we've also spoken about a lot is your currency devaluation, your decline in buying power, while gold still holds that value.
And that's it. In closing from my side, the same thing over those same periods of time, gold has only gone up. We gave you some really interesting examples of it last week when we spoke about Argentina and we spoke about Nigeria and even South Africa. Even over these normal periods of time since 2020, if you had held gold for the same period of time, your gold would be far worth more than the money that you would have in equal form. So say R1 million in January of 2020, that gold would be a whack more right now.
Definitely would, yeah.
In closing, thanks a million. Willem, anything else?
If you liked the video, hit the like button, share, and if you want to see some more, be sure to subscribe, and we'll see you guys in the next one.
Thank you.